You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back on a Thursday for episode 2 of your bi-weekly options extravaganza known far and wide, hither and yon, as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are binging yet again. Just got the numbers in for July, and July, the newest, hottest, busiest month in the history of the network, 15-plus year history of the network. So each month these days surpassing the last, which we love to see. We love to see that so many folks are really just gobbling up all the content we're putting out there. If you're one of our many on-demand listeners, all we ask is keep rating and reviewing. Clearly, folks respond to that stuff. The algorithms like it. So we have 15-plus years of ratings and reviews, obviously, but the new stuff certainly seems to be weighted strongly. So if you like what you hear, keep rating, reviewing. Even if you've been listening for a long time, it really does help the new folks discover the content. And the new folks are legion, as we've all seen. And then, of course, if you want to go above and beyond, you want more in your lives. And hey, who doesn't? Then you want to go to theoptionsinsider.com/pro. And that's the place to go to get all access to all of the extra stuff to do, bonus stuff we do. So, of course, you're talking about 2 exclusive shows and talking options oddities. We're talking the pro Q&As. And then, of course, you get live access to this, every other show we do throughout the week. And coming up in a little bit, we have our giveaway winner, our pro Q&A, or I should say our pro winner of our Options Insider Pro Trading Crate. We have, I'm looking at it right now, listeners, mountain of stuff. Who knows what's going to get in there? Everyone's bespoke. Everyone's custom. They're all different. So it's going to be fun. So we're going to announce the winner in a little bit here on the show. First, let me announce who's joining me on said show. First off, back or maybe in the middle of his sojourn to the mountains of far, far northern New England, we are joined once again outside of his provincial hamlet, a rare sojourn outside of St. Charles, for the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir. How goes your sojourn through the Far East?
Loving it. It's always good to get away, but St. Charles is calling me home. I'll be back there very shortly, but it's really nice up here in the New England area. Lots to see, lots to do.
There you go. And also joining us this week, a special guest star, special guest co-host. You know him, you love him from his weekly forays on Options Playbook Radio. He may or may not have just recorded one a little while ago, so that should be hitting the network, I should say, on demand as we speak. Don't listen to it right now. Wait till after the show is done. Then go listen to it. Of course, I'm talking about none other than the options guy himself, slumming it with us here on the option block, aka Mr. Brian Overby, the senior options analyst over there at Ally Invest. Mr. Overby, welcome back to the option block, sir. It has been too long.
Right. It has been a minute, and I'm very excited to get back on the options block and partake in all the festivities.
There are a lot of festivities, so let us commence the party. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading, what is lighting up our tapes. And it's another one of those days, listeners, where the market is kind of struggling to figure out what it wants to be today. Does it want to be a real boy? Does it want to just sink down into the crevasse and just melt away? It's kind of struggling with that right now. We have the Dow off, not quite 0.5%, about 0.4%. The S&P off a little bit less than 0.25%. And the NASDAQ was red. Now it's actually up, closing in on up about 0.1%. So it's a whole bunch of nothing really today. Not a huge move really in either direction for any of the major indices. They're still trying to figure out what they want to be today. S&P hanging out right around the 4150 level, a little bit shy of that, listeners. So obviously well north of where we were last week when we posted our poll saying, do you guys want to fade this rally or not? We were shy of 4,000 still then. So still north of that for everybody out there who is watching and waiting with these markets with bated breath. What are the markets going to give us next? Today, kind of a bit of a mixed bag. That means all of our vol friends are kind of close to where they were on Monday's show. VIX, when we kicked off the show, was at about a 22.30. That's down about 0.2 points from where it was on Monday's show. And then VVIX, the vol of vol, continues to tick up, if ever so slightly. It's at an 85. It's up 1 point from where it was on Monday's show. So we are rebounding ever so slightly, ever so mildly from, we were starting to threaten that 75 level, didn't quite get there. Now we're turning back around. We'll see if things keep quieting down again going into the weekend. We might see VVIX retreat yet again. VXX continues to do its own thing today. It's up about 0.25 point because why not? Who knows what's going on with VXX on any given day? It's at about a 21.75 right now. UVXY 10.5 literally unched from where it was on Monday's show. As you know, when it starts getting around the 10 handle, listeners, things get a little wonky with UVXY. Our guest coming up on Friday's Pro Q&A, Mr. Once and Future Dr. Bix, has said many times when UVXY gets around 10, he just refuses to play with it because it gets weird. And that's, of course, because they're thinking about the reverse split there. And so UVXY just kind of hanging out today, a rare day where it's not really doing much. SVIX 1265 also literally unched from Monday's show. And UVIX, add them to the mix as well. 11 also unched from Monday's show. So a whole strip of unched on the vol side. And then we've got vol Q, the at-the-money vol of the NASDAQ at about 26.25, down about 0.5 point from where it was on Monday's show. In order, let's go around the horn. Let's start, Mr. Brian. You haven't joined us on the option block. It's been quite some time, certainly not this year. So I would like to start there. We've been taking the pulse of a lot of our guests. We'll get to this week's action and today's action in a second, but we've been taking the pulse of a lot of our guests on just where we stand right now in the overall broad market. Of course, we saw a lot of sell-off to kick off the year, ball popping, Fed, inflation, Ukraine, a whole bunch of things weighing on the market. Now we're seeing a little bit maybe of a recovery, but I'm curious for you, where do you stand right now on where we sit from a broad market perspective, sir? Then we'll get into all the fun from today.
Well, broad market, I think the answer is mixed metaphors. We went through a strong earnings period, especially with the mega cap. And we had a lot of people coming in, manufacturing, saying that supply chain concerns weren't that big of a deal. And then Caterpillar comes out this week and announces that they have great demand, but huge supply chain concerns. So we're getting just mixed messages from the marketplace. We saw at Ally Invest a higher than normal volume in the tech sector going into earnings. So our customers were trading it. That doesn't necessarily mean they're all buying it in general, but there was more volume this quarter around than the previous 4 quarters in the tech sector. So is it a flight to safety? Is tech so beaten up that you might consider it now as a place to actually start allocating some capital. Well, it proved to be so far as Amazon is concerned and Google is concerned. And that's been the theme of a lot of my shows that I've been doing over on the Ally Invest side. And obviously Options Playbook Radio is bottom fishing, using options to try to pick strategies on stocks or on sectors that we wouldn't mind being in. Looked a little bit at some pharmaceuticals. We talked about Pfizer not that long ago. Also looked at a couple of the semiconductors, talked about NVIDIA. Even went so far to talk about Ollie's, which is a discount retail store here that's very heavy in the South. And that had a lot to do with what was going on with inventories and with the major retailers like Target and Walmart, who have had inventory issues and have been very blunt about that in their earnings reports. So the market, we're seeing mixed metaphors. One of the things everybody keeps talking about a recession, but it's hard to have a recession when after all of these earnings reports that came out, they're still forecasting earnings growth. Now, obviously it's muted, but a lot of the companies that do forecast are saying that they still see growth going into the end of the year. So once again, I think the moral to the story, mixed metaphors.
I like it. Maybe we have a title for our show, Brian, Mixed Metaphors. And what's lighting up your tape in today's somewhat mixed action, sir?
Well, Coinbase. I've always, as far as Coinbase is concerned, gets beaten up by what happens in crypto. And sometimes that's good and sometimes it's bad. Obviously, the big sell-off in crypto has really brought Coinbase down. But then we had a major news headline today, and that was the focus of my podcast today, which is Options Playbook Radio. I'm talking about all these strategies that we're looking to bottom fish. Well, today we did a speculative trade on Coinbase, and huge news that they are looking to partner with BlackRock. And BlackRock is one of the, if not the largest asset manager in the world. They have more than $8 trillion under management. That's trillion with a T. So the fact that they want to use Coinbase to offer up the ability to be able to buy some of these cryptos and other things that Coinbase offers to their institutional investors, well, that just puts a lot of respect on the management team of Coinbase. And hopefully some people will maybe be able to realize that Coinbase isn't just a crypto quote unquote stock. It actually offers a lot of different services, and they're kind of heading the way as far as regulation is concerned. They've been willing to work with regulators. They want to get that past them so that they can move beyond it. And very, very interesting news in my mind about Coinbase and BlackRock.
Yeah, looking at Coinbase right now, they've had quite the recovery. Of course, a year ago, they were trading, well, not even a year ago, November of last year, they were trading 368, almost 369. So obviously, from that perspective, they've fallen off quite a bit, but they got down as low as $40, listeners, back in May. They are now trading $93. They were trading $58 just a week ago. So this has been quite the run for them. Just over the past 5 days, they're up 54% or 33 handles. So quite the rally here for Coinbase. Obviously, the BlackRock news giving them quite the lift out there. Intriguing stuff. Will they make it onto our most actives today? I guess we'll have to find out. Let's go on out now to not the land of St. Charles, but the mountains, the far mountains of northern New England. Mr. Uncle Mike, sir. First off, which mountains are you climbing? I'm intrigued. And then B, what's lighting up your tape today, sir?
Well, I'm not quite in the mountains today. I'm in western Massachusetts. I think that's, I guess, is that technically the Poconos? I don't know my geography. We were there. So, yeah, we were there. So I'm still not in those mountains. But I think these are the Green Mountains, I think, somewhere like that. But anyway, so yeah, very nice. We're in driving distance of a lot of places from out here. So it's just nice to check markets on the Wi-Fi and see some sites. It's always a pleasure. But in terms of just what's happening with this market right now, this has just kind of been it's been, I like to refer to this as an exciting road to nowhere market, at least for this week. And that we're up like 20 points on the week in the S&P, but it doesn't really feel like that because we've been so far up and so far down. in multiple days this week, but haven't really gone that far. So I think that there are numbers matter again in this market. In that a couple of years ago, it was just like, oh, who cares what non-farm is going to be? Who cares what the Fed does? Where's it just going to go up? Whereas now things are starting to matter again. And I think that with non-farm tomorrow, that could be a market mover again. And it's not just it could be for the better, it could be for the worse. Whatever we'll see tomorrow, of course, but it actually means something again. Treasuries, just checking that out, following the 10-year like I do. We're looking at that right now in that it's definitely rallied off of where it was a couple months ago when everything was just going down with both stocks and bonds. But when we have that, we are recovering from that. So we're still down on the year on the 10-year note, but we have yields higher. And so it seems like the market is kind of accepting the fact, at least the bond market is accepting the fact that 75 basis points in a rate hike like we had recently, it's not 100, so that doesn't seem so bad. So it doesn't look like we're going to get 6% yields in the 10-year anytime soon. But a lot of the sell-off that the 10-year has had over the course of the last year has been on the expectation of the Fed raising rates, which it has. And now it's it's almost as if the 10-year market was ahead of the Fed, which oftentimes markets are. And so now what's going to be interesting is that we're not sure when the rate hikes are going to stop per se. They're still going to continue, but at what point will they stop? It'll be interesting to see how the 10-year will actually react to that. So looking at that, also we have oil. It's just kind of weird to say as quickly. Crude oil is in the 80s right now, and that just feels weird to say just with it moving like it has, or with how far it's come up. So oil is starting to retreat a little bit from the end of the world rally with which it had earlier this year. And we are starting to get back in line a little bit in the oil world. So for those of us who are driving our cars around New England, that's a good thing. So we're happy about that. And then the final thing, I still don't like Bitcoin. And that is all I have for right now.
All right, let's keep on rolling here. It is Thursday. The party continues. I promised you this on Monday's show, listeners. We will get to it now. For all you pro folks, get your tickets out of the hat. I'm just kidding. You're all automatically entered. So just hang out and see if your name is called. Brian, we have a special treat for you joining us as our special guest co-host today. You will get the honor, nay, the privilege of choosing this month's, or I should say last month's, Pro Trading Crate winner. Are you ready, Brian, for this awesome responsibility I have just sprung upon you?
Yeah, well, it's nice to be sprung upon. So yeah, go ahead, bring it.
Right,
I'm not quite sure what I'm getting into.
All right, so what I'm going to do, Brian, is when I'm going to hit in a couple seconds, I'm going to hit a button, and our random number generator is going to start flashing. That has all the numbers associated with all of our different members. Whenever the mood strikes you, you can wait to the rest of the show. We can sit here in silence for 40 odd minutes if you want, and then you tell me to stop. I will stop it, and that number will correspond with a member name, and we will pick our winner. So, all right, you just hit the button. It is flashing. Brian, whenever the mood strikes you, you tell me when to stop.
All right, I will do that. I do not feel the mood right now. I will have to wait a little bit until the urge subsides to actually say the magic word.
I see. You're getting into your branding now with the lying down until the urge goes away.
But I'm happy to do so. And I also want to throw something out there because I think Mike came up with a better title for the show, Road to Nowhere. And I would actually like to know what the listeners think. Should it be titled Road to Nowhere or Mixing Metaphors?
Oh, okay, listeners. There you go.
I kind of like that.
You have a challenge. You have a challenge for you as Brian is continuing to wait to pull the trigger, sir. It's up to you. You're the guest host. You get to decide, sir.
All right. Stop.
All right, there we go. I got it. The button has been hit. All right. Let's see. What number is this? I don't recognize this number. It looks like it might be a new person. Let us see. That number is Matthew Mickey. That sounds like a new name. So new people winning. Love to see the new blood in there all the time. So congratulations to you, Matthew Mickey. You are the winner of the July Pro Trading Crate. What does that mean? That means our producers will reach out to you. We obviously have all your contact information ready. We will we ask you a couple of things. We'll ask you for your clothing sizes, as well as maybe a book or educational preference you might like. Everything else is up to us. The rest is all custom. The rest is all bespoke. We will put together an amazing array, an amazing assortment of one-of-a-kind options goodies and send that out to you post-haste. So look for that email from our producers soon, Matthew. And how fun is it? You got to get picked by the options guy himself. That makes it a little bit more fun. Let's see what kind of fun we're having in the markets today. And it's kind of a mixed bag, as Mr. Uncle Mike kind of alluded to. Everyone is kind of keeping their powder dry ahead of the big non-farms tomorrow. That will really kind of set the tone for going forward, it seems like. So today, kind of a bit of a mixed bag. VIX certainly reflecting that. 166,000 contracts on the tape. The ADV, 439,000. SPY, 2.91 million. So kind of light, not even really halfway for SPY yet. The ADV out there, 6.59 million contracts. The S looking decently active, 1.07 million. The ADV about 2.1 million out there. So looks like it's on par, on track for the S. IWM closing in on 200,000 contracts. The ADV 677. So seems like a light day out there in small caps as well. And the old triple Qs, 1.42 million contracts on the tape right now. The ADV 2.46. So it seems like NASDAQ has a shot at hitting that brass ring today. Let's see what's doing good papers, doing some business out here in the single names. And it's actually a pretty active day, listeners. 265,000 contracts is what it cost to break into the top 10 today. It's been a while since we've seen that frothy of a number. So that's good to see the single names are lighting it up today. That gets us to number 10, which is Robinhood. Haven't seen them on the list in quite some time. They're having a nice day today as well. Not quite as nice as Coin, but pretty good. Up 50 cents or nearly 5%. 1081. Haven't seen them north of the 10 handle in a while here for Robinhood. So that's quite a run for them. They're up 20% just in the past 5 days. A lot of that just in the last couple of days. They were trading the 9 handle, actually an 8 handle earlier this week. On our Monday show, they were 890. So nice little pop for them. Nearly $2 here for Robinhood. Is this sustainable? They just laid off 23% of their workforce. A lot of things going on. Questions are still swirling around the impact of the curtailing of PFOP. What will do for Robinhood, company that was kind of built on it. And so intriguing stuff. But trading 1080 back north of the 10 handle again. Remember, wasn't that long ago we were selling 10 puts willy-nilly out there on Options Oddities listeners, for all you pro listeners. And then we broke through the 10 handle and kind of kept our powder dry for a bit. We're selling maybe 8 handle puts. Now we're back up to the 10 handle. Do you have faith here? Would you sell a 10 put in Robinhood right now? I'm curious. Hit us up. Let us know. Either way, good for 265,000 contracts. And number 9, we're already over 300,000 listeners. It's a pretty active day. That gets us to the artist formerly known as Facebook, also the subject of our question of the week this week. 300 to 3,000 contracts on the tape for Meta today. I said it, Meta. I hate it. Facebook. 169.83 is where it's hanging out, up a little over $1 today. Number 8, I wondered if they would make it into our top 10, and they have. At number 8, it's Coin, 304,000 contracts on the tape. If you want more on Coin, of course, check out OPR after this show. Listen to Brian doing a deep dive into Coin this week on OPR. Coinbase up 12.25 handles just today, or 15.25%. As I mentioned, on the week, it is up 33 handles, or 55%. My goodness, they have come for Coinbase these days. Man, that's quite the lift for Coin after they were looking at some rough times. $40 not too long ago, listeners. Intriguing stuff. Coin, 304,000 contracts. Now let's flip it. The other side of that coin, so to speak. It's BABA. They're actually rallying today, in spite of the fact they're up about nearly $2 or 97 and change. Good for 315,000 contracts, in spite of the fact that they're kind of on delisting watch as well now. So never a good sign for a name usually, but it's rallying today. Number 6, your favorite movie theater / gold miner. It's AMC, 1917, up nearly $1 or 5.25%. So a nice bit of lift on them. Folks are excited for AMC earnings, apparently. We got 361,000 contracts on the tape for AMC. Number 5, NVIDIA, 370,000 contracts. Number 4, yes, I said number 4, it's Apple. I haven't seen Apple down below number 3 in forever. Today it's number 4, 879,000 contracts. Number 3, the old Tesla, 893,000 contracts. Number 2, sneaking in there at number 2. Usually it's hanging out at number 4. It's AMD. AMD on the rampage today. Let's see. By the way, that's 971,000 contracts on the tape for AMD. AMD up nearly 6 handles or nearly 6%, trading right around 104 right now, listeners. So a nice pop for AMD. That after they follow Intel in warning that the PC market is falling apart, they're up 6%. So there you go. And then number one today, listeners, once again, Amazon. Amazon not impressing the flow master, but it's impressing the market today with some volume. 1.06 million contracts. It's up 2.5% or 3.5 handles out here for Amazon. Speaking of numbers, listeners, the numbers are in hot off the presses from our friends over there at OCC. Once again, answering the question that has bedeviled us for the entirety of 2022, which is, can the options party continue? And the answer for July is kinda, I guess. I like the way OCC plays with their headlines a bit. They announced that July average daily volume up 3.6% year over year. That's good news, right? That sounds great. And it is good news. But also, if you dig in a little bit, you see that total volume, 742 million contracts, that's down 6.6% compared to July of last year. So July year over year was actually a little bit lighter than it was this time last year. Of course, they don't lead with that. They lead with the ADV still being up, which of course is a good thing. ADV continuing to grow is a sign that we could perhaps have another record year. Brian, you're out there in the trenches day to day over there at Ally, seeing the options numbers. Are you surprised at these OCC numbers? July down overall, but ADV up, or is that kind of what you were expecting, sir?
I think that I would say that is what I would expect. Mainly because last year was such an amazing year as far as option volume is concerned. So I think they're solid numbers. And then you also mentioned that Amazon's leading the way. And that's really what we're seeing at Ally Invest. Like I mentioned on the top of the show, we're seeing a lot more volume come back into the tech space as far as our clients are concerned. And it's always a heavily traded space, but going into earnings last week, that's what our customers were focused on. That's where a lot of our volume was aimed.
Interesting stuff. Same question for you, Uncle Mike. Were you surprised at all by this, I guess you can call it mini resurgence, but also not in July, or is that kind of what you were expecting, sir?
It's the mixture of metaphors and the road to nowhere kind of with that headline when you think about it. You can't say I'm surprised. And so with just to add to what Brian was saying, I mean, when you get earnings and customers want it, then that's going to be a good thing for the option trading volume.
Good thing indeed. Looks like our winner of our Pro Trading Crate is in our chat today. So congratulations to you, an Army veteran. So there we go. Thank you for your service there, Mr. Mickey. We'll have to throw some fun stuff in that crate over there. By the way, look at some other numbers here. ETF options volume up 38% in July, and index options volume up 29% in July. So those were a couple of highlights. And we have actually seen a resurgence in ETF and index options after most of last year. They kind of languished. Everything else did well in the option space. A lot of, your individual single names did well, but it was very much the meme stock rally last year. But the ETFs and indexes didn't do as well. Now they're starting to recover. And of course, a lot of that driven right now, not the indexes, of course, but just the overall volume we're seeing, driven, as Mr. Options Guy himself said, by earnings. Big slate this week: Activision Blizzard, Moderna, eBay, Under Armour, Robinhood. I won't list all of them. The Duck, aka Duke Energy, Alibaba, DraftKings. Big names popping off. Let's hit a couple really quickly. Earnings move results, earnings season, and earnings trades reports, all updated, hot off the presses from our friends over there at ORATS right now for your reading pleasure and information, listeners. TheOptionInsider.com is the place to go. Check those out. All free because we like you folks so much. Crocs before the bell today. So what's going on in rubber shoe land? Let's find out. They were $77.38 going into their announcement. They were pricing in 10.8%. They delivered nearly 14% to the dark side. So I guess rubber shoes not selling well in a high inflation environment. Obviously, a lot of input issues going on there in the rubber shoes as well. So that's probably driving up their costs. Let's go down a little bit. We have so many names popping off here, listeners. We got our old friend Revolve, RVLV. They popped off yesterday after the bell. They were going into their announcement about $31. They priced in 14.1%. They delivered 12.7%. I have a feeling we'll be hearing that name again today, a little bit later in the show. We've got more. eBay. They were yesterday after the bell, $50.50. They're pricing in 6.5%. They delivered 5.8%. So pretty much coming in line, a little bit light. NRG, we talked about them a few times on the show. They were today before the bell. 37.37 is where they were going into their announcement. They're pricing in 5%. They delivered 4.5%. So a lot of names coming in right around in line, listeners. Let's go out to everyone's favorite pizza, PZZA. This is Papa John. So what's going on with Pizza Vol? They were today before the bell. 96 3/4 is where they were trading. They're pricing in 6.2%. They delivered 4.7%. So a little bit lighter over there on the Pizza Vol front as well. And since we're talking pizza, I guess we should probably talk burgers and shakes as well. All right. Shake Shack. They were today before the bell as well. 54.43. They're pricing in 9.8%. They delivered 8.4%. So we're seeing a lot of underperformance, listeners, which is kind of interesting because most of the names we've been talking about have been pricing in a heck of a lot of extra juice. Lilly, let's go out to the pharmaceuticals, see how they're doing. They were today before the bell. 313.83 is where they were going into their announcement. They're pricing in 4.2%. They delivered, get this, 2.3%. Wow. I got a feeling when the numbers are all added up for this week, we're going to be looking a little bit light on the vol front, listeners. Let's just scroll down, see if we see any. Oh, they got the old Duke, a.k.a. the Duck. That was today before the bell as well. 110.82. They're pricing in 2.7%. They delivered 0.6%. Wow, that's a whole heck of a lot of nothing on the vol front. We got more. There's so many popping off today. A couple more. Baba before the bell today. They were at 95 3/4. They were pricing in 7%. They delivered 0.7%. My goodness. They were 90% underperformance. Wow. You sold some juice in Baba. You're looking all right. Let's go out to the name that I know the Rock Lobster was working his 1x2s on because he missed it. It's Portillo's. Let's see. 24.16 was where they were going into their announcement. They were pricing in 11.8%. My goodness, they delivered 0.7% as well. Even more underperformance than Baba. Wow, 94% underperform. My goodness. We're getting a whole heck of a lot of nothing today, listeners. Wow. So I guess for today, at least, selling premium was the way to go. We got Beyond Meat coming off after the bell today. DoorDash after the bell today as well. Lyft after the bell today as well. We got Square. We got a lot of big names popping off. Yelp after the bell. DraftKings tomorrow. So you want to check out what's being priced in for all of those. TheOptionSider.com/pro. And you know what? As I said, I thought this week was going to be light. This week is still averaging out to 114% somehow on the earnings season report. So obviously a lot of other names have dramatically outperformed. 147 names reporting this week, listeners, and we're so far at 114%. So, and the season overall averaging 105%. So we're still looking pretty good in spite of the fact that a lot of the names today kind of looking light. Speaking of names today, my goodness, there's 20 new trades on the earnings trades report, listeners. I can't possibly list them all. All these tickers, any ticker you can imagine, probably got a trade going up today. We've got long straddles. We've got short straddles going up. Looks like they're buying a lot of straddles today and a couple of the calendars here. So that brings us up to 73 long straddles, 35 short straddles, and 53 long calendars that we are monitoring for your trading information and education. You know where to go if you want to check all that out for yourselves. TheOptionsInsider.com is the place to go. Meanwhile, we got to keep on going into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
Everybody, let's commence the weirdness. Let's go on out to the Odd Block. Unleash the Eye of Sauron. See where it fixes its fiery gaze this week. And first off, we're going out to a name that's been making a lot of headlines of late as well. Not all of them good. People are mad at this name. This is Warner Brothers Discovery, the newly minted combo of Warner Brothers and Discovery. So you have your traditional Discovery, your science stuff, then you have Warner Brothers, which is DC superheroes and all sorts of interesting things, all kind of under one umbrella now, which makes for maybe a strange marriage. ticker symbol WBD, trading right now $17.42. Obviously, we don't have a long track record on this name. It just came together earlier this year. So it kicked off the year, got as high as 25 and a half. I kicked off the year $25.50. That was back in April. Looks like it traded at one point 31.55. Must have been an intraday print. Looks like on April 13th, maybe it hit that level. Ever since then, it has been pretty much selling off. It got down to as low as 12.76. It's like that came on June 29th. And since then, it's actually had a nice little rally. Over the last month, it's up about 20% or about a little over $3. So nice little run for them. 17.41 is where they're trading right now here for Warner Brothers Discovery. And what did our Eye of Sauron find out here? Looks like it found just a whole bunch of stuff. Options Palooza. Of course, they've been making headlines because they came out recently and the Discovery folks canceled a whole bunch of DC stuff that had movies in particular that had already been filmed, that were already made and ready to come out. And maybe they needed some post-production. I don't know. And they just said, these are movies that cost $90, $100 million. We're just canceling them. We're not going to release them. So people up in arms about that. Also a strange decision. You have a sunk cost and just not going to do anything with that at this point. So that was kind of weird. So folks are a little bit concerned about what's going on over there. And looks like someone is taking advantage of all that concern / movement to just trade it up here in WB. We have, looks like 3 sizable spreads going up all within a few minutes of each other. Kicking things off, we had the AUG 17.5 19 call spread going up 11,000 times, and the stock was a little bit lower. All these stock was a little bit lower. Stock was 16.98 for these. Looks like the 19 calls were opening, so the 17 calls might have been closing. I'll have to check the OI numbers on those. So it looks like they were picking up that vertical maybe, and then also 10,000 of the SEP 12.5 15 put spread paper buying the 15 puts on that one. And let's see, they did that for 45 cents. And then if that's not enough, they also did the August 15-17 ratio put spread 1/3, 15,000 by 5,000 times. Did that for a whopping nickel. That was opening, looks like, on both of those there as well. So we had a lot of weird paper here. It's just trading up a storm. So it looks like the AUG 17. Let me pull it up here really quickly to see exactly what they did on that AUG call spread. Let's see. So the 19 calls, looks like they bought the call spread. Yeah, they bought the 17.5, sold the 19s. So this could be a bit of a maybe rolling up a collar now that the stock has rallied a bit. We are threatening that 17.5 strike, so he could be rolling that up to the 19 strike and also rolling up. He bought the 15 put, so he could be rolling up the 12.5 put to the 15 put. So maybe he had a 12.5, 17.5 collar. Now he's rolling it up to a 15, 19. That could be. But the numbers are close, not quite exactly, but they're pretty close. Then we have this also on top of that, this AUG 15-17 ratio put spread. Looks like they sold the 15 puts 15,000 times, and the 17 puts they bought 5,000 times. So buying the 17 puts, selling this one's all over the place. Brian, I hate to throw you into the deep end on one of your first appearances here on the Odd Block, where we got a whole bunch of options weirdness. Is any of this resonating with you in this options palooza here, sir, in Warner Brothers Discovery?
The ratio put spread is the most interesting of them. As you mentioned, the other option contracts were probably just adjusting or rolling positions. But if we're selling a boatload more puts at 15 than we are buying at 17, so I assume it says 5 cents. Is that a debit or a credit that came in? It doesn't necessarily matter. But if you're looking at it, so that to me is a very bullish trade. If you're selling all those 15 puts to buy some 17 puts, you can call it a ratio put spread, but that's the way that I would look at it, and that's how I would explain it. Is that I'm trying to I'm trying to sell enough puts to pay for some other puts that I would like to buy in that scenario. So I find that interesting. I'm not quite sure what the look is on the market by doing that, but ultimately they're saying I wouldn't mind buying the stock at 15 if I'm reading that right. So interesting trade. That one is the most interesting trade to me.
Yeah, a lot of stuff going up within a few minutes of each other. All this went up in a total of about 5 minutes, listeners. Yeah, the last one is kind of the weird outlier for me as well, what they were doing 1 by 3. Everything else, I think that looks like rolling up a collar. That makes a lot of sense. But the other part, why they're adding this kicker 1 by 3 on it, it's kind of weird. Let's keep on rolling, see if we can find more weird stuff. A lot to squeeze into the show today, listeners. Let's go out to Centennial Resource Development, ticker symbol CDEV, CDEV, trading right now $6.29 on the year. Let's see, a year ago it was trading $4.50, and it shot up to $9.40 on April 14th. Then it gave it up again down to $6.50 on May 20th, then right back up again to the high for the year on, guess what day, listeners? Not June 8th, but June 7th. Pretty close, of $9.70. And then it gave that back up again pretty quickly. By July 14th, was trading $5.33, and then it has rallied about $1 since then, up to where it is right now, right around $6.30. What did our Eye of Sauron find for today? It looks like someone is taking advantage. They're going out of ways, though. They're taking advantage of this chart here and deciding, you know what, if it gets back up to around that 52-week, actually, no, they're going for the 5 strike. They're cutting that in half. So they're getting a little bit more aggressive. They're saying if it gets up to $5, they're out. They came in and blasted away at 10,000 of the Jan 2024. So they're going out of ways. They're not going to Jan 2023. They're going all the way out to Jan 2024 of the 5 calls. And as a result of going out that far, listeners, they got themselves some juice. $2.65 they sold these things for. So when you can sell a call for half of the value of the strike, that's interesting. Of course, you got to go out of ways. This is going to tie up your trade for a while here. But they're getting $2.65, so they're effectively stopping themselves out, listeners, at $7.65, which is not a terrible level. It was trading there not too long ago, a little bit less than a month ago. It was trading north of that. So intriguing stuff. They had earnings today, so this was a post-earnings trade, so maybe someone heard the numbers from today and decided, the near-term upside ain't that great. Going all the way out a year and change, I don't mind blasting away at these calls. Mr. Uncle Mike, you're a covered call fan, covered call aficionado, I would say. What are your thoughts on going so far out with your covered calls? Do you like to do that? And then B, in particular, these CDEV calls where they're getting more than half of the value of their strike, at least. That's something.
I mean, typically, if I'm looking for income in covered calls, I like to go out typically a month. In the bond world, I'll go shorter term than that a lot of times. But in the covered call arena, I think a month's kind of 1 to 2 months is kind of my sweet spot a lot. I will go further out if I'm doing like longer term collars and things like that. But if I'm just looking for the traditional wheel trade or income, whatever way you want to call it, that's kind of my sweet spot. In terms of the fact that you can get half of what your strike is on a covered call, I think that's probably a little bit too much, too dependent upon the juice of the trade to really feel confident in the stock itself. If I'm not confident enough in the stock itself to where I'm getting that much juice, whatever strike I'm doing it, I don't think it's something that I would want to go near even with my enemy's money. And so, not that I don't even think I have any enemies. I like everybody. Maybe people view me as an enemy, but I don't really dislike anybody. But if I did, I wouldn't even do it with their money. So I would probably shy away from something like that because taking in that much premium, it typically doesn't end well.
I like it. You're looking that gift horse in the mouth. You're saying, yeah, that's too much juice. I decline, sir. Take that gift horse away from me. Yeah, I don't like the time frame of this one either. That's way too far for me. The premium I have less issues with, but I could see why you would be uncomfortable. And given the fact that you and I are mortal enemies, I will not allow you to do it with my money, sir. All right.
Okay, very good.
All right, let's go out to one more here. Then Uncle Mike missed us on Monday, listeners, so we got to squeeze in a strategy block as well. Let's go back. I said we are going to hear this name again on the show, listeners, and we are. This is Revolve Group, ticker symbol RVLV. They do like a lot of the online fashion retail. We talked about these back on the show over a month ago, June 27th, listeners. We talked about someone drawing a line in the sand with some puts in Revolve Group. In particular, it was 8,547 of the July 22 half puts. They sold these for 21 cents. They got a decent price, actually. They were 15 at 35. This isn't the most active name, and they still got 6 cents better on the bid. So that's can't argue with that. The stock was 29.73 when they sold these, and that was nearly a 100 vol. That was a 93 vol. So it wasn't a ton of premium, but from a vol perspective, it was pretty juicy. They had some time left to go on these. This was June 27, so they had all of pretty much July to go. So interesting stuff. There were earnings. Actually, I take it back. Earnings were yesterday. So there were no earnings baked into this. At the time, we didn't hate these. It was 22 half. It was pretty much over $7 out of the money. It wasn't the most aggressive thing. They weren't getting a ton of juice, but we didn't hate them. And it looks like these worked out, listeners. The stock closed at $27.20. These puts were still open. So it looks like our friend here pocketed a cool $180,000. Brian, you got to like it when a plan comes together. This guy sold some puts, and maybe he really wanted the stock, but I'm guessing he'll be happy with $180,000. What are your thoughts on this put sale working out, Brian?
Well, you love it when a put sale works out. And he obviously did it enough, or whomever the trader might have been, to make it worth its while if the trade actually did not get put to him. So in general, I would say you probably was selling this more so as a speculative trade, but I don't really know. But I always love when selling puts works out. I just like the strategy. We've been talking about it a lot on a lot of my recent podcasts and YouTube videos. And just this market, I think, behooves selling puts to buy something you wouldn't mind owning at a lower price. Now, you can also speculate this was around earnings, got a lot of juice because of that, but I just like when they work out. That simple.
We love it when a plan comes together. What 80s show is that from, listeners? I'll put that to you smart folks in the chat. Meanwhile, we missed him on Monday. He's back beaming in from the mountains, so we got to squeeze it in. A little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, once again, it is time for Uncle Mike to hold court with some options, tip, or technique, or a bit of education. And Uncle Mike, this is about mosquito bite repellents and camping gear that I'm going to cut you off, sir.
No problem. But it is about a long strangle. So I want to talk today about a trade that I couldn't even tell you the last time I've done a long strangle or bought a long strangle. And I want to go through it today just because I'm trying to cover all the basis of all the strategies throughout my strategy block library. And it's a trade that I don't do, but I think it's important for people to do just so they can have or not to do, but to just have an understanding of what it is and how it would work. So it can relate to other trades such as butterflies, iron butterflies, condors, put spreads, call spreads, whatever the case may be. So what is a long strangle? Well, this is a trade that you would consider if you feel you're going to get a ton of movement in an underlying and you're just not sure which way. So what it is you're buying an out of the money call and you're buying an out of the money put in the same expiration. And the idea is that if the underlying goes way up, you'll make a lot of money on the call, but that put expires worthless. But overall, you'll be profitable. Or if the stock goes way down, you'll make a lot of money on the put and the call will expire worthless. So that's the concept behind it. It's fairly simple. Now, why don't I do that trade? Well, the reason is number one, I'm not a non-directional kind of guy. I'm just kind of the bull in the room. So I've always been the bull, and I shouldn't say always, but for a vast majority of my career, I've just been the eternal bull. Either I'm bullish or I'm long-term bullish, short-term cautious. And if I don't feel comfortable being bullish, I just get out. I'm not a bear. And so this is a trade. It just doesn't match with what I do. It doesn't match with my business model. It doesn't match with my trading model. It's just not me. But why am I talking about this and why am I telling people why it's important? Well, number one, having the knowledge of what people are doing is very important. If you're looking at where option strikes are and you're looking for volume and open interest and things like that in your analysis, you can say, oh, someone's doing you see a lot of open interest. Oh, someone must be doing a long strangle. Someone is expecting a lot of movement in this underlying. That's one reason to have it. Another reason is just because of the fact that there's no such thing as too much knowledge. But I think the main reason with which you need to have it is that this can fit into other strategies. So let's say, for example, that you want to do an iron butterfly. And I do iron butterflies or traditional butterflies at times as part of other strategies, and sometimes alone. This is the wings of an iron butterfly. So let's say you wanted to sell a call and sell a put, but you don't feel comfortable with the unlimited risk. Well, you buy the strangle. These are the wings that protect you from the unlimited risk of a naked short straddle. And so that's something to where you need to have an understanding of how the smaller trades work before you can really get into how the more complex trades, and I shouldn't say smaller, the less complex trades, before you get into the more complex trades. And that's why I'm explaining what it is and how it would work. And if you'd like a more detailed analysis of how it works, check me out on Twitter at Mike TOSAW, TOSAW, because I just tweeted out a video on it.
There you go. Check the man out. He is prolific as we keep on rolling into a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's get into some of your mail really quickly in the live chat. Brian, looks like you got some fans here. Option God says he is happy, excited to have Brian on the option block. So there you go, Brian. Your fans are coming in. And then we have votes here. Looks like Unlimited in the chat is voting for the Road to Metaphors for the episode title. So he mixed your two suggestions. So what do you think of both of those, Brian?
Well, he mixed metaphors. So, yeah, I like it. I like both of it. And obviously he is a god, so you'll always love to get praise from your gods.
When someone asks you if you're a god, you say yes. Another 80s movie. We're throwing out all the 80s today here, listeners. Well, let's see what we got here on the docket from our question of the week. We already paid off last week's question on Monday's show. This week's question, I touched on it earlier in the show. The artist formerly known as Facebook, a.k.a. Meta, struggling a bit right now. Maybe not so much today, but in general. The stock down over 50% on the year. When we posted this on Monday, the stock was trading around 163. So we asked you the age-old question. If you had to buy an at-the-money call or put expiring at the end of this year, so December 31st, which way would you go? Would you buy that put because you think there's more downside to come? Would you buy that call because you're in rally-ho mode? Or are you just washing your hands? You're done with Meta completely. By the way, right now, listeners, Meta trading right around 169.40. So up a wee bit from where it was on Monday's show. Brian, we will give you pride of place. What are your thoughts? And then more importantly, what do you think our audience is voting for, sir?
If I'm looking at it and I'm looking at the retail space and what I see from our clients, I would actually say rally ho a little bit. We're seeing more and more volume go into that mega tech space, and not necessarily saying that they're correct about this space, but I'll do it from aspect of what I'm seeing in volume at Ally Invest.
Well, certainly today's price action would back that up. Mr. Uncle Mike, same question for you. If you have a thought, have at it. And then B, more importantly, what do you think our audience is up to, sir?
Well, I think the audience is saying call from that standpoint. If they have a gun to their head and that's where it's got to be. And I think that's what I would say, too, because I don't know. I mean, it's like I remember right when Facebook IPO'd and it didn't do so hot and then people got into it. Then it did very hot. So I don't really follow it super closely, but I think I would. So I can't say it's one that I'm looking at constantly. But if I had a gun to my head, I think I'd buy the call as well.
There you go. 2 votes for the call, listeners. Unfortunately, our audience disagrees. 47.6%. We have a bearish audience these days. They were fading the S&P last week as well. They say, look out below. They're loading up on that puts. 28.6% saying they're buying the call, and sneaking up number 3 there, pretty close to number 2. We have 23.8% of you saying you're just done with Meta entirely. You want no more to do with this name. I like this handle, T-Car Dizzle He weighed in to say the issues they have, i.e. the Apple privacy rules, aren't suddenly going to get better because Zuckerberg wants everyone to believe Narnia is real and we should all spend money there. What's wrong with Narnia? I'm more of a Tolkien guy myself, but if you're more of a Narnia guy, hey, to each their own out there. And let's see, we got time for... we're kind of coming up against it. We don't have time for these. I was going to try to squeeze in these questions, but we are running up against it. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the coming weeks. Are you more of a Lewis guy? More of a Tolkien guy? What, Narnia? Lord of the Rings? What's your favorite? Hit us up. Let us know. Listen, that should be our question of the week next week. That'd be fun. But around the block we go. Let's go out to our guest first, Mr. Brian, sir. What are you keeping an eye on through the end of this week into the weekend, sir?
Well, I kind of like to see how Caterpillar will do. They had the CEO was on CNBC saying a lot of good things just about demand across the world, but then again, talking about supply constraints. So see if that stock can do a little bit of a bounce back, a little bit of a dead cat bounce, because it really got beat up after earnings. I don't know if it was necessarily fair. And interested in DraftKings. We're getting to fantasy football, Mark, and you and I have talked a little bit about a fantasy football show. I think it would be a lot of fun.
That would be pretty fun. Maybe we get some DraftKings sponsorship. I don't know. I'll shake the cup, see what comes up. But that would be fun. Fantasy football show would be fun.
Yeah, I am a fan of it, so I'll be looking at DraftKings tomorrow and see what it does. Not necessarily trading it, but just kind of interested in how their earnings come out.
I will say I got out of the gate hot last season, and then my team fell apart. Just everyone got injured. By the end of the season, I had no recognizable names left, Brian. It was kind of a horror show. And I think I limped into the middle of the pack. So I started out of the gate strong, and then just nobody good. I also discovered how few good tight ends there are in the league last year. When you're playing fantasy, you realize there aren't that many people that are actually amazing at every position. There's only a handful. But I digress. That'll be for our forthcoming fantasy football show. I don't know, Uncle Mike, are you down for that fantasy football show too? And what are you watching for the rest of the week, sir?
I don't know if I'd be a very good guest on that show. I'm more of a local IHSA Illinois football follower myself, being that I help out at the local high school, St. Charles North. So it's kind of what I use all my football time on. But I will definitely agree with you in terms of tight ends. Tight ends are worth their weight in gold, no doubt about that. If you have two good tight ends on your team, and you can do a lot of things with that. Defenses can't have an answer to multiple tight ends. And if you have that, you are very hard to beat. So with that, now that we're off the football philosophy 101, I would say I'm watching Non-Farm tomorrow and just seeing if we can break through 4,200. S&P kind of topped out at there a couple months ago, and so we'll be interested to see if we can break through there.
All right, that music means we have come to the end, at least of this program. But don't worry if you're saying you need more in your ear holes. We got you covered. We're coming back in a little bit. Live with Dan the Man Gramza to break down everything going on the futures options side of the fence. Should be fun. All you live folks, hang out in the chat. We'll pump some fun stuff in there. We'll be back in 28 minutes now with Mr. Dan. But before we go, let's go around the horn. Let's start. Brian, thank you for jumping into the fryer today. The fryer, easy for me to say. Jumping into the fire today. I must be hungry. I must have missed lunch. But yeah, thanks for jumping into the fire. Our chat, obviously appreciated it. We'll have to get you back on the option block more frequently, sir. And aside from that, if folks want to check out what you have cooking over there in Ally, where should they go? What should they do?
Well, the simplest thing to do is just follow me on Twitter. It's at Brian Overby. I tweet about all the educational events that we do. Other things is we do have a YouTube channel, Ally's YouTube channel, and I do the stock play of the day every Tuesday on that show. Click subscribe, ring the bell, and you'll be able to follow along on all of those events.
There you go. Ally Invest is the place to go. You know where to find them on Options Playbook Radio. It's just on this network you're listening to right now, or you could subscribe to it individually if you are so inclined on pretty much any platform under the sun that carries on-demand content. OPR will be there waiting for you. And, of course, Ally Invest for all the good stuff. If you want to check out his work, his handiwork directly, you can go to optionsplaybook.com. That'll also show you all the plays he's talking about in a lot more detail if you don't have the book in hand. Lots of good stuff. And Mr. Uncle Mike, you also have lots of good stuff. If folks want to check it out, where should they go? What should they do?
Yeah, follow me on Twitter at Mike TOSAW, TOSAW. I try and put out a lot of content. Check out my YouTube channel. Just type in St. Charles Wealth Management. And if you're looking for a financial advisor who delves in the option product, assuming it is appropriate for clients, feel free to reach out to me. Check out my website, stcharleswealth.com.
There you go. stcharleswealth.com is the place to go. We got to get on out of here. Like I said, we'll be back in 26 minutes now, live with the one, the only Mr. Dan Gramza to break down the entire world of madness that is futures options. Stay tuned for that. If you're on the on-demand side, then, of course, just hit next. That show should be waiting for you. Then back again tomorrow with a trifecta of awesome. First off, noon Central, 1 p.m. Eastern. For everybody, including you on-demand folks, we got ball views coming at you. Then after that, we got a double dose of pro goodness. We've got options oddities. What's the craziness that's lighting up our tape this week? I guess you'll have to find out on option oddities tomorrow. And then after that, we got the once and future and now present Dr. Bix joining us in the hot seat to answer all of your questions with a great pro Q&A session. So if you hadn't swung on over to the optionsinsider.com/pro yet to sign up, what are you waiting for? Missing great stuff. And, of course, back again next Monday, another episode of The Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.